of the people speaking a lot about what's going on with precious metals behind the scenes and stuff. What do you think happened for the last 4.5 months during this whole coronavirus situation with precious metals? Obviously, we saw silver going down a lot, gold kind of going up. What was going on behind the scenes in terms of that stuff?
Well, I mean, on a macro level, from a retail perspective, we have more interest from the mainstream than I've ever seen in 30 years of owning Miles Franklin. The awakening, as I would call it, the rude awakening, maybe even, has opened people's eyes to the fact that traditional forms of investing need to be reevaluated. Excuse me.
Yeah.
Even in the best case of time, in best case examples and in good times, best laid plans need to be reevaluated, and I think that's kind of where we are right now. Normally, when we would see times of uncertainty, when we would see times of volatility, times of chaos, whatever that chaos may be, certainly nothing like we saw here a few months ago, but market chaos, let's say, the first stop would be, for most investors of any means, would be to go to the bond market. The bond market, which was traditionally considered the bastion of safety. In fact, it used to be that stocks were considered risk on and bonds were considered risk off. The low interest rates, however, have created an environment where bonds really aren't a place to be anymore. Let me explain. When I started in this industry in the 90s, you could buy a U.S. Treasury earning 9%. So you could put $2 million into some treasuries earning 9%, make $180,000 a year, live off the interest, and live like a king, not touching your principal. Now, at 0.6% interest on the 10-year Treasury, that $2 million doesn't even net you $12,000. And when we talk about real interest rates after factored into inflation, you're going backwards on a 10-year investment. And so interest-bearing investments, or the bond market, really is not a place that people want to go to any longer. And so we have found, since the beginning of the year, massive price inflation in this industry, courtesy of demand from the mainstream public that I've never seen ever in 30 years. I guess if I were going to characterize it one way, from a perspective of the retail side, it is of mainstream coming into the fold, no longer just speaking to the choir. We talk about the price. Look, last April, the Bank of International Settlements reclassified gold as the only other tier 1 asset on the planet. If you take a look at what gold has done since April 1st of 2019, you see a 45-degree angle moving up. I believe that will continue. I think silver will have its day. When we go back and look at previous peaks, previous market cycles, gold almost always leads the way. Silver will follow up and typically outperform gold in the second half of the cycle, especially in terms of silver lagging when we are in a recessionary environment. And so, with everyone being locked down and businesses shut and industry really grinding to a halt, the industrial side of silver has perhaps been focused on too much. I do believe that silver will retain its role as a monetary metal. It'll retain that, I think, in spades. As soon as gold breaks through its all-time high, and we're just about 10% away from that. Remember, gold is at all-time highs against almost every major currency on the planet right now, with the exception of the US dollar. And I think once we get through that 1930-ish range into 2000s, silver will go off to the races. And I think it'll be probably the go-to investment for the second half of this year and into the future. I look at it as the most undervalued commodity on the planet and a gift. All of this manipulation and the actions of JP Morgan on the COMEX market is a subsidy and a gift for those of us who still have the ability and desire to accumulate silver at what I consider to be the most undervalued asset on the planet.
A lot of great points there. I guess going back